tax enthusiasts. Welcome to my webinar today. You may not actually be a tax enthusiast, but I'm really happy that you've joined me here today so we can talk about my favorite subject, which is taxes. And what I'm even more passionate about is helping people file their taxes without any stress or headache. First, I'd like to introduce myself. My name is Jennifer Procell. I am the Chief Product Officer and VP of Tax and Accounting here at IUGO Inc., where we make taxes ridiculously simple. And that's what we're here to talk about today. We're talking about how to make your taxes simple. We will be focused primarily on your standard tax return. And so this will be really good for individuals who maybe this is your first time filing taxes. Maybe you have always used a professional in the past and you want to file taxes on your own this year and keep that refund all in your pocket, which is great. Or maybe you filed your taxes last year and you felt like maybe you forgot something or you had an error, or perhaps you felt like you didn't get as much of a refund as you should have gotten. So this will be a perfect webinar for you. We're going to talk about how easy taxes really are, how you can enter your information and e-file all on your own. If you are self-employed, you're a contractor, you have gig work, you are absolutely welcome to stay. However, you may find more benefit from our self-employed webinar that we are holding at a later date. So I hope that you join me there, where we talk about your self-employed income and the deductions that you can take and how you can even file your taxes on your own. So, we love to hear from our viewers. We love to hear, where you're coming from. So feel free to leave us a comment in the events page, letting us know what brought you here today to join our webinar. So I want to get started with our taxes. And I want to first start with, what our goal here today is. And I get asked many times, what is it that stops people from filing their own taxes? Or what do you think the biggest hurdle is for taxpayers? And really, it is fear. It is fear of messing up on your taxes. It's fear of entering the wrong thing and the big bad IRS comes and gets you. It's fear of, like we said earlier, missing out on a big credit that, thousands of dollars that you could have saved. Lots of fears, but mostly it's about entering things in incorrectly and getting in trouble with the IRS. But I think that's probably harder to do than you realize. So we're going to go through this step by step. I'm going to show you how you can easily file your taxes. We'll start straight from the login. And again, if you do have questions, feel free to send us those questions so we can get answers to you. So because IUGO makes taxes ridiculously simple, this is the platform that we're going to use. So I'm just going to enter my example taxpayer here. So just like any other software, you just need to set up your password, username, make sure you have a way to verify your identity so that when you log back in, no one else can log in under you because you have a 2FA set up. So once we get in, it's just going to send us the verification code. Again, this is just making sure that we have entered in the correct phone number so someone else is not having access to our tax information. Security is very important when you're filing your taxes because obviously you have all kinds of identifiable information that you don't want to release to anybody else. So here we are in the account for IUGO. And the first thing you need to do when you are going to file your taxes is get all of your information. Go ahead and take that minute, make sure any income forms that you have received, you have that copy of, whether it's online or in paper. So if you are an employee, you're going to have a W-2 form. So make sure you have that form. You're also going to need birth dates of anybody that you're reporting on your tax return. You're going to need their social security number, and you'll need addresses. So make sure that you have all that information on hand before you get started, and then it will make the process way quicker for you, and it'll make it. I filed my taxes yesterday, and it took me 15 minutes. So it really can be done very quickly. So I encourage everyone to not be afraid to get this done. So first thing I'm going to do is I'm going to get started. It tells me to get started here, and I'm going to go ahead and enter in my information. So bear with me while I get everything entered in here. You can see this is just data entry. So, things that you want to make sure that you're entering in correctly. Make sure you're spelling the names correctly because it will compare that to the IRS. And if it's spelled differently, it will reject. Make sure the Social Security number you entered is correct. Is the Social Security number valid for employment? This sounds a little bit confusing, but it will say on your Social Security card, SSN not valid for employment. If you see that, then you mark no. Otherwise, mark yes, that it is valid for employment. Put in your date of birth. Date of birth also needs to match the IRS database in order for your return to get accepted. Go ahead and enter in your occupation. Now, this doesn't affect your return one way or the other. This is just something that the IRS, the government, collects for data purposes. Definitely need to do your address. This is important to have correct because as we, remember from COVID, anytime you get a stimulus payment, if they don't have direct deposit on file, they're going to send this to the last address on file. So make sure you have the correct address in here. And now I'm just going to select to see if I have any of these special situations that apply to me. So I was not a student. I was not considered legally blind. I'm not disabled. I'm not a former member of the U.S. Armed Forces. No one else can claim me as a dependent. I am not preparing this return for someone who's passed away. I do not live in a federally declared disaster. So I will select none of the above. And that's it for me. So now I want to talk about your living situation. So everything with your tax return is going to start at filing status. So if you entered in the incorrect filing status, you're going to have issues all throughout your return. So it's very important, and it's very important to understand what your filing status is. So you select the one that's not just correct, but most beneficial for you. Filing status dictates what your deductions are. It can dictate what credits you're allowed to take, and even your tax bracket. So for my return, this is going to be for a married couple filing jointly. So I'll select married, and I do want to file this together with my spouse. This is the preferred method probably over 90% of the time. There are situations where you may file separately from your spouse. However, if you are filing jointly, you have usually a higher tax bracket and a higher deduction. Plus, you have an opportunity to claim additional credits for that. So I'm selecting yes here. Okay, so I want to answer this question. So did you or your spouse take the first time homebuyer credit in 2008 and are required to make payments? Well, if you don't know what this is talking about, then the answer is no. I guarantee you, if this applied to you, you would understand. And that happens all throughout the tax filing process. If you see a question and you think, I have no idea, then you can assume that it doesn't apply to you. If you took out a first-time homebuyer credit in 2008, then you are perfectly aware that you have been making repayments throughout time on that. So if it does not make sense to you, you can almost always assume it does not apply to you. So now I've entered my information. I need to enter my spouse's information because I am filing jointly. That means we're going to report both my income and my spouse's income on the same tax return. So I'm going to enter his information here. Again, I need to make sure that I have his social security number, because this is very important. If it's entered incorrectly, my tax return is going to reject. Hopefully you know your spouse's date of birth, so you can get that entered in. And also we'll need his occupation. And then I'm just going to look at the special circumstances as well for my spouse to see if any of these apply to him. In this case, they do not, so I'll select none of the above. And that's it. I have my personal information, I have my filing status information, and I have my spouse's information in here. So I'm going to save that. So this section is very important, and we're going to talk about dependents for a minute. Dependents will really create a lot of potential credits for you. So it's important to claim the dependents that you have. But maybe you're not quite sure, if you can claim a dependent. So we're going to talk a little bit about who a dependent is and if you can claim them. So dependent is basically anybody that you provide support for. You would need to provide over half of their support. They need to live with you more than half of the year, and they need to be related to you. So there's several tests that that the IRS is going to look at. The first one they're going to ask is, are they a citizen or a resident of the United States? They need to be a citizen or resident before you can claim them as a dependent. Do they have a relationship to you? Now, your spouse, even though you may claim half of the support, you cannot claim your spouse as a dependent. They are claiming as a joint taxpayer. Even if they do not work, they would be listed as a joint taxpayer on your tax return if you're filing jointly. You cannot claim your spouse as a dependent. And then the age is important when it comes to whether different types of credits, right? So we'll talk about age a little bit later when we're talking about the child tax credit. And then again, the residency. So the dependent needs to live with you more than half of the year. There are some special circumstances that would apply. Maybe you have a baby in December. Obviously, they only live with you for 1 month. You get to still claim them as a dependent for the full year. So if you have a good software, it's going to ask you the right questions so you can determine who is a qualifying dependent and who isn't. So you're not having to try and decide who you enter and be worried that you're going to get in trouble for entering someone who's not a dependent. So for our case, we're going to select yes, that we have a dependent, and we're going to need to enter that information in for our dependents. So let's put in the daughter's information. Also going to need her social security number. Again, this SSN valid for employment. Maybe this dependent is too young to work, but you can still look at their social security card and make sure that it does not say not valid for employment on there. But it is important as far as claiming the dependents and certain credits. Put the date of birth in there, what her relationship is, and she's the daughter. And she lived with me for 12 months. Did I pay more than 50% of the living expenses? And since my husband and I are filing together and we're both her parent, yes, we paid more than 50%. And she is a U.S. Citizen, a resident alien. Now, if she was a child of a previous marriage, or she has another parent, a caregiver, then you do have to determine who is allowed to claim that dependent. Now, that could take a little bit more information that is needed. So definitely reach out if you have questions on shared custody of a child to make sure that you do have the rights to claim that dependent. But it's going to ask me these questions. Again, special circumstances. So we're not the child's step parent. No one else can claim the dependent. And for this practice, I'm not going to mark that we have dependent care expenses for the dependent. So I'm going to save that. And then just continue adding as many dependents as you have. So, for our case, we have another child. So I need to enter in his information. he has a social security number that is okay to work. This is a son, lived with me for 12 months. We paid more than 50%. He is a U.S. citizen, and none of these apply for William as well. But dependents don't necessarily have to be children. So perhaps your mother-in-law lives with you, or you're taking care of a parent or grandparent. You can enter their information in as well, as long as you're providing at least half of their support. And just make sure you put in the correct relationship and how long they live with you. For this one, I'll have to select if they're disabled or a full-time student. I'll put here that my mother-in-law is disabled, but for parents, you don't necessarily have to be disabled to be able to claim as a dependent, as long as you're paying more than 50%. And their gross income is less than $4,400. So I need to also check, because maybe there's another child who's taking care of this parent. So I need to make sure that I have the ability to claim my mother-in-law as my dependent. And I do. None of these apply, so I'm going to select Save. And so now you can see here that the system is already showing me who all is a qualifying dependent. So maybe I also have my nephew who has been staying with us while he's going to school. So let's enter in his information. And I'll put that he is my nephew. Maybe he lived with us for 8 months while he's going to school. He is a full-time student, but maybe I did pay more than 50% of his expenses. He's is a citizen, but he has a job as well, so his income is not less than $4,400. And I'll hit Save. And this one is now showing that he is still, 1 second, let me make sure I have that in there right. Okay, so now it's showing that he is not a qualifying dependent. So I just wanted to show you what that's going to look like when we go into the next page. So I'm going to save my dependents. I have 4 listed. So that's it. So my demographics are done. I have my personal information. I have my marital status. I have my dependent situation. And I am done with the tell us about yourself. So I'm going to look here. We're going to get a summary. This is a good opportunity just to make sure that you have everything entered in correctly. So it is showing me that my filing status is married filing jointly. So the system automatically picked the best filing status for me. And it shows, my information, my spouse's information, my dependent information. And so everything looks good. So I'm going to select next. You can see that the non-qualifying dependent is not listed here. So that's important because we don't want to claim, credits for a dependent that does not qualify. All right. So now that we have our personal information, we're going to start adding our income information. So this is when you're going to grab all the information that you have for your income. Now, this shouldn't be a mystery. You should have an idea of the type of income that you've earned. What type of income do you need to report? You need to report any income that you earn throughout the year. If you're an employee, you will receive a W-2 form, and that will report your wages and how much you paid in withholding taxes. But maybe you also earned interest or dividends, so you will get a form for that. So if you get interest off savings or something like that, the bank's going to send you a 1099 INT to report your interest income. If you traded stock throughout the year, not just purchased stock, but traded stock, you can expect to get an income form for that as well. So not all income gets forms. So make sure if you know that you earned income, whether it's cash, maybe you did something on the side, make sure that you're reporting all that income. But at this point, we want to make sure we know the income that we received so that we can report that income here. So the first thing we're going to do is just select what we have to report. So for our purposes, we're going to report wages because, like I said, we're talking about your very standard basic tax return here. So we're going to enter our wages W-2 income. And I have my forms ready, so I'm going to start entering that in. So I'm going to add my new W-2. The first one I'm going to enter in is for myself. So it shows that it's for me. It has my social. Everything is correct. The address matches on the W-2. It's not altered or handwritten. And it's not corrected, so I can move on. So when you're entering in your income forms, do not be afraid. This is just data entry. You're just matching the form letter to the software. So if, most software is going to easily identify where you're going to get this information. You don't have to go search for it. If you have to search for it, you are probably not looking at the correct form. But you must get, your companies are required to issue your W-2 form by January 31st. So if you have not received it, you should be taking a look for that W-2. So we're just going to enter the information here for the employer. Okay, so here's a bunch of fields for a bunch of numbers, but again, I'm just getting this information straight from the form itself. So let me just enter that in. And you can see that we automatically calculate some of the wages for you, but these can change. If they're different on the form, you just change it on here. But we've automatically calculated the Social Security tax and the Medicare tax because it's the same percentage regardless. So those are automatically calculated for you. For this W-2, I don't have anything additional. I don't have any dependent care benefits. I don't have any information in 12A through 12D. So I can select next. And this is in Texas, and Texas does not have a state income. So I'm done. That W-2 is completely done. And it's pretty quick as long as you're just filling out your copying over the information from the document to the system. You should get done fairly quickly, just like we did. So now I need to enter the W-2 for my spouse. So I'm going to change it. So it is important that you are entering in the W-2 for the right person. The IRS already has this information on file. So if you don't file a return, don't think the IRS does not have your information. The IRS already has your income information on file. Your company, your employer has already sent this W-2, so they have that information. When you file your return, it's going to check the W-2 information that you sent against what they received. So make sure that you're entering in the correct person that it's for and the employer. So we're going to enter this in for the employer, and this is the employer identification number. This just, each business is going to have that information. And you don't want to do misspellings because it could reject if the spelling isn't the same. And back to the wages. So let me enter this in for my spouse. Now he actually has a different number here. This usually means that you paid money for retirement before tax revenue that you paid for retirement or for health savings plan. Something that ends up not being taxable. It's still taxable towards your Social Security and Medicare, but it's not taxable for income tax. So that is entered. Now he does have information here in 12A through 12D. So I'm just going to enter that information. You shouldn't have to guess here. This should be right on your form. His form says code C and the amount of $43.71. And he has another code. And this one is code D for elective deferrals. So this is for retirement. So you had 4849. 2022. And then he had a third code of DD. So I'm going to enter that information here. And this is the amount that he paid for health insurance. Okay, so all that's entered. He does have retirement plan checked on line 13. But he has nothing in under 14, so I can go ahead and select next. I'm done with that. Again, this is in Texas. We have no state tax in Texas, so I can hit save. All right, so that's it. Income is done. I have no other income forms. I didn't earn any interest. I didn't have any stock. We just went to work, earned our employer wages, and came home. Nothing else special about this tax return. You can see that I have a total income of $48,931. This is our total combined income. The IRS is collecting data to see if you had any digital assets, rewards, payments, if you did any crypto trading. So it is asking this question, but we did not have any crypto trading. So I'm just going to move on. And that takes us to adjustments. The hardest part of the tax return is completely done. We entered in our demographic information and we've entered in our income information. The rest is just trying to get that tax liability down. So we're going to talk a little bit about how these taxes and calculations work so you can understand a little bit more fully what this means when we talk about adjustments, when we talk about deductions, when we talk about credits. So we're going to start with adjustments. These can be if you had student loan payments that you made, if you had contributed to an IRA, other type of information may qualify as an adjustment. So if you received a form, pull it out. Maybe it qualifies for something. So let me get out of here. So I want to look and see if any of these adjustments apply to me. I'm not an educator, so that does not apply to me. But I did make student loan payments, so I'm going to select that one. I was not self-employed, so I cannot take those adjustments. I did not have a health savings account. I didn't pay alimony. I didn't have any penalty on with early withdrawal savings, and I did not have any IRA contributions. Like we talked about before, if you are not certain if something applies to you, then it probably doesn't. But I do know that I made if you're making student loan payments, so I can select that. Okay, and that's the only adjustment that applies to me. So I'm going to select next. So now I just need to enter that information, and I do have a form, and this came from my loan processor, and they sent me a 1098E. So I'm going to enter that information in here. It's just going to ask me how much I paid in interest payments, not student loan payments, but interest payments. And there is a cap of $2,500, but I only paid about $228 in interest payments. So now you can see that I have automatically a $228 adjustment. It has brought down my total income by that same amount, dollar for dollar. So now my adjusted gross income is $48,703. So when you take that adjustment, it reduces your total income dollar for dollar to get you to your adjusted gross income. And it's always important to know what your adjusted gross income is and how to find it, because you end up using that year over year to sign tax returns. And you also use your adjusted gross income when you're looking to find out where your refund is when you go to the tax IRS site. Okay, so I'm done with adjustments. I only had that one. So now let's talk about deductions. One of my favorite topics is deductions, because I'm always being asked all the deductions that people want to take. So let's try and explain this a little bit so that it's easy to understand. You have two types of deductions. You have when you're filing a basic standard return. You have your standard deduction, and this is a sum of money the government gives to you based on your filing status. You can see right here, since my filing status is married filing jointly, I have an automatic standard deduction of $25,900. That's a lot of money. That deduction brings down that adjusted gross income to give you your taxable income. So because this is getting you to your taxable income, you want the biggest deduction you can have. Since they raised the standard deduction, most people, this is the biggest deduction that they have. If you think that you might have more in itemized deductions, and this is where you get to your mortgage interest, your property taxes, you made a lot of charity donations, what about all my medical expenses? All those questions. Why can't I deduct this? Why can't I deduct that? Ever since we've purchased our house, my husband always asks me every year, why aren't we deducting our house expenses? Well, that's because we get a better standard deduction than claiming what we're paying on our property taxes and our interest. We would have to have quite a lot to exceed that amount. If you do, then by all means, take that deduction and itemize your deductions. I think it's important to know that if you're itemizing your deductions, you need to have that information to back it up. So if you're claiming that you paid $7,000 in property taxes in 2022, make sure that you have that paper that shows you paid $7,000 in property taxes in 2022. Same for charitable donations, medical and dental expenses. Make sure that you have that documentation to show that you qualify to take that deduction. While we're here, let's go ahead and talk about, your work expenses, because we still get asked this question a lot. People who say, especially a lot of people working from home, they're working remotely. Maybe they've purchased equipment so they can work in the home and they want to deduct that on their taxes. This is no longer a taxable expense. A deductible expense. It used to be deducted as a miscellaneous deduction before, but that's been removed. It's no longer available. If you are an employee, you work for somebody else, you cannot deduct work expenses. That's equipment, that's your home, that's gas mileage. None of those are deductible. So you might check with your employer if you thought they were to see if you can get reimbursed for those, since you cannot take the deduction if that's an issue. So now that we have that cleared up, I'm going to say that I have no more than $25,900 in itemized deductions, and it's going to apply that to my return. I'm going to move on to my credits, which I love to talk about credits because this is where refunds get increased. And we're going to talk about non-refundable credits and refundable credits. And we're going to talk about some changes from 2022 that are different from last year. So let's start with that. In 2021, there were a lot of expanded credits to help with the COVID pandemic. One of the ones that most anyone with a child dependent saw was the increase in child tax credits. Last year, the child tax credit was $3,000 per child, unless they were under 6, and then it was $3,600 per child under 6. And another difference is it was fully refundable. All $3,600 or $3,000 per child was fully refundable. So this year, that reverts back to the old laws back in 2020. And so now this year, your child tax credit is a maximum of $2,000 per child, with $1,500 of that being refundable. Another difference is child and dependent care expenses. So if you do have child care, you were able to deduct a lot of that or get a credit for a lot of those expenses last year, and it was fully refundable. This year, it reverts back to the old numbers. So you may not see as big of a credit this year as you did last year. Doesn't mean you've done something wrong. It just means that expanded credit is no longer available. So still take it, but don't be surprised if it looks a lot less than it did last year. And the child tax credit, in 2021, most everybody received advanced payments of their child tax credit, but that was not available this year. So whatever child tax credit you have calculated in your taxes is what you're going to receive back, because you don't have to pay back any advance payments that was sent to you by the IRS. So here we can look, and we've got some credits that are already selected for me based on the information that I've already entered. I've got my child tax credit, I've got my earned income credit, and my retirement savings contributions. Because if you remember, when I was entering in my W-2, I had entered in some retirement information. So because I have a low to moderate income, I qualify for earned income credit and retirement savings contributions. So I'm going to go ahead and go to the next page. Well, let's make sure that I don't have any other credits that apply to me. We did already identify I don't have any child and dependent care expenses. I don't have anyone in college, but if you or a spouse or a dependent is currently in school, make sure you examine the tuition and expenses for college credit. And that will be reported to you on Form 1098-T. I don't have a plug-in car, but keep an eye on this credit because it is expanding for 2023. If you've been considering purchasing a plug-in car, then it may be the year to do so. I don't have any estimated taxes, and I did not apply my prior year refund to this year. So I'm good to leave this page, and I feel confident that I've selected all the credits that I need. All right. Now this is popping up and it's asking me if I received a letter from the IRS requesting that I file Form 8862. Like we talked about before, if it does not ring a bell to you, it doesn't make sense to you, you can assume that it does not apply to you. This is just if you've had an earned income credit or child tax credit that was disallowed in a previous year, you got a notice from the IRS telling you to file this form. But we don't have this, so I'm going to select no and continue. So all of these credits are already calculated for me. I don't have to enter any other information. I have a $200 retirement credit, a $2,161 earned income credit, and a $4,500 child tax credit. So let's take a look at the credits down below. So I have total credits of $6,861. 2,320 of that is non-refundable. So let's talk about non-refundable and refundable credits. So non-refundable credits are going to take your tax liability, meaning you have your taxable income. From that taxable income, we're going to determine how much tax you owe. That's your tax liability. Then that tax liability is reduced by your non-refundable credits. So it won't go past zero. So if you have $1,000 tax liability, but you have a $2,000 non-refundable credit, it's only going to bring you down to zero. It's not going to go to negative 1,000. So that's a non-refundable credit. So you're going to get up to the amount of taxes you owe, but no more on non-refundable. Now, refundable credits are the fun credits because those are the ones that give you extra money that you didn't pay in, but you're going to get payment for. So these are your refundable credits. So these will take it past zero. So in the same situation, let's say I had a $1,000 tax liability, but a $2,000 refundable credit, then I'm going to get $1,000 back from that credit. So it'll take my tax to zero, and then the remainder comes back to me. So this also happens with the taxes that you've paid in. So you have your tax withholding. So your non-refundable credits are going to get applied first. And then that tax withholding is considered a refundable credit. And I'll show you what that looks like here shortly. So now I'm going to go to my other taxes. If you received insurance through the marketplace, this is going to apply to you. This usually applies to people who have self-employed income. So we will talk about our self-employed taxpayers on our next webinar. But for our purposes, we're going to just we're going to add the health insurance, where you just have to answer if we had insurance through the marketplace. So don't know if you remember, a few years ago, we had to say whether or not we had insurance through anywhere. We don't have to answer that question anymore. Now we just have to say if we had insurance through the marketplace, which is also known as Obamacare. So if you went through the marketplace and you received insurance, it is required that you fill this out. Even if you think you're not going to get anything back or owe anything, you must fill this out or your return will reject. I'm going to select no, but If you did, you would select yes, and you would get your form 1095A, and you would enter that information in. Now, one of the things that has changed, it's still in place from the American Rescue Plan, is the cap to receive the advanced premium tax credit is increased. So even though you think you may not get a credit, go ahead and, you need to fill this out anyway, but you might find yourself with a credit where you didn't qualify before. So definitely fill that out. But for our purposes, I'm going to select, nope, we had insurance through our employer, as we saw from our W-2. Okay, so I have no other taxes, and that's it. I've completed my tax return. I feel very confident that I've entered all my income, that I've entered my dependent information correctly. I've taken all of the adjustments, took the correct deduction. I took all the credits that apply to me. The system made it very easy, where it went ahead and applied all credits that I qualify for, and it automatically applied those. So now I'm just going to review to make sure that it looks right. And here we have a breakdown of the numbers and how we got to the refund. So, I hope that you've been watching this number here in the upper left-hand corner. I think we started at $11 from the first W-2 I entered, and now we're at $8,491 refund. So that's a great refund for a family of 4. So here I'm looking to see, make sure. Another review, it shows who the taxpayers are, shows my filing statuses, and how many dependents that I have. Here's my earned income. So this is my salary income. And then I have minus my adjustments like we talked about. So I have $228 in adjustments from my student loan interest that I paid. So it brings my adjusted gross income to $48,703. I got to take that $25,900 standard deduction. It was the best deduction for me. So that brought my taxable income all the way down to $22,803. So I'm only being taxed on this amount, not my total income. The tentative tax for that, meaning the taxes calculated from that amount, is $2,328. But if you remember, I had some non-refundable credits. So I have credits to cover that tax, which is $2,328. That brings my brings my total tax owed to 0. So my non-refundable credits brought my tax owed all the way down to 0. So now I'm starting fresh. And so all those taxes that I paid from my W-2 that was reported, the $3,958, that's all coming back to me. So also, I had refundable credits in an amount of $4,533. If you remember, I had the earned income credit, and I had the remaining of the child tax credit, the refundable part, plus the retirement credit, which the retirement credit, apologies, that actually is part of the non-refundable credit. So this refundable credit is the child tax credit refundable portion, because it's broken into 2 parts, and then the earned income credit. So once you do the math, that gives you how much I'm getting back. So it's pretty clear, and you can always go look at these numbers. And if you're confused or you're not sure that you did something right, you can always go back and double check it. Many people will go ahead and fill out their tax return up until this point if they're waiting on a form, and just save it until they get any more of those forms back. We don't have an injured spouse, so I'm just going to select next. And the system's going to do a check. It's going to make sure that I entered everything in correctly. It's not seeing any red flags. It's not seeing any issues that I need to address, incomplete items, and that's done. And it looks like I've got green checks all across the board, and my return has no errors. So I have completed my tax return. Now what's left is to tell the IRS how I want to get paid. So I have a $8,491 refund. I don't expect that I'm going to owe taxes next year. I expect my situation is going to be basically the same. I don't want to apply it to next year's or to this year's taxes. This is basically saying, I think I'm going to owe taxes. I'm going to apply it don't send me my refund. I just want to apply it to next year's taxes. There's also direct deposit. This is the preferred method for several reasons. Again, I'm going to refer back to the child tax credit advance payments. I'm going to refer back to stimulus payments. If you remember correctly, the ones who had their direct deposit information on file with the IRS were the ones who received their refunds first. So if you get your refund by direct deposit, the IRS will update that information. And if there is anything that you get money back, maybe you have an extra refund or some reason they're giving money back to you, you will get it quicker. If you get your refund via direct deposit, you get it usually within 21 business days, as opposed to 4 to 6 weeks, which is usually with a paper check. And then, of course, direct deposit is just more secure than waiting on your $8,491 refund check to come through the mail. So I'm not sure if you've ever been waiting on something in the mail and you've just been nervous about getting to it before someone else does. You wouldn't have to worry about that with direct deposit. So now we just have to get our banking information. So make sure, this is very important, that you're entering this in correctly. You should be able to look at your check to get that information. If you don't have checks, many people don't have checks anymore, go to your banking site and pull that information. Most software is going to show you that you have a correct routing number by displaying a bank. If you don't see that, then you might want to check to make sure that you have the right one. And then make sure that you have entered the correct account number. So I always suggest that you key in, at least to confirm the account number, key that in to make sure that you're not making any mistakes. So if you need to, this is just a second check to go back. Make sure you have the right account number. You don't want to send your refund to somebody else, of course. You want it to be deposited into your account. And if it's the wrong account, it doesn't match the name, because it is going to look at the name, it's going to bounce back to the IRS, and then you're going to have to wait a little bit longer. Which actually brings me to a very good point. When you're doing direct deposit, make sure that your name is on the account, because if it's not on the account, it will go back. So even if you're married filing jointly, make sure it's going into an account with your name on it. You want to select what type of account it is. Is it checking or savings? So this one's going into my checking account, and it's for the full amount. But maybe you want to also deposit some into savings. Well, you can do that as well. So you can just select however many accounts you want to deposit your refund in. I think you can do up to 4, actually. So let me just put that in here. Okay, and this is savings. And let's say I want to do maybe $3,000 in my savings. So that reduces my amount to be deposited into my checking account to $5,491, and then $3,000 is going into my additional bank account. So I've entered in my bank information. I'm just going to continue. This is just maybe some, finalization. If you have questions, maybe you are a little concerned about maybe something that you took, or maybe you have some questions, you can opt in for a professional second review, and a tax professional is going to come in and review your account, make sure everything looks good, answer any questions that you have, let you know of any red flags. But for our case, ours was pretty standard. I didn't have any questions. I felt really confident in what I've entered, so I'm not going to do the professional second review. And that's it. We just have to check out and pay for our return. And once that's done, I'm going to be able to sign my return. You'll do this electronically. We talked about this before. You will need your prior year adjusted gross income, and you can find that on your 1040 form, or you're going to need your 5-digit PIN that you used the previous year. And once you sign it, then you're just going to e-file it and it will go to the IRS. They will do a basic check to make sure that the information matches what they have, or and it will either accept, or if any of that information does not match, then it's going to send a rejection and tell you that you need to make those changes. If at any point, you're doing your return and as simple as it may seem, you have questions, you have doubts, you can always have a tax professional file your taxes for you. And at IUGO, even our tax professional services, we make ridiculously simple. You just have to upload your documents. We assign you a tax professional, and then we prepare and e-file your return. As simple as that. You do it all within the same platform that we were just in, and it gives you an opportunity to upload those documents that you have, and then you just submit it, and you can check in anytime for real-time updates for our Tax Pro system. And it's completely secure in our secure portal. So that's it. That's how we do our basic tax return. Make sure, I'm going to recap what we have. Make sure that you have your income forms. Make sure that you have your Social Security numbers of everybody that's going to be included on your return, birth dates. Make sure you have your name spellings correctly. If you're unsure of who you can claim as a dependent, get that information ahead of time. And then any other documents that you may have received. You will get a lot of documents, and some of them you don't need. If you own a home, you're going to get tax documents for your home. But if you're not going to do the itemized deduction, you don't have to worry about putting that in. So if you're left over with tax forms at the end of doing your return, you can ask yourself, is this income? If it's not income, then you're probably good at not entering that. It's usually for a credit. But of course, if you do have questions, we do have professionals that can help. We're on standby. We're open. We're ready to go. It's tax season. We're excited for it. We hope that you get into our system and get your taxes filed quickly, securely, and with very little problem, very little effort. And you'll be your own tax preparer. But again, we have our tax professionals ready to go as well. So if it's not your thing, you still want to have someone else do it, then do it from the comfort of your couch. Let us do it for you, fully remote, and we will have it done usually within 24 hours. So that's it. Any questions that you have, if they have not been answered, we'll be sure to get all those questions answered. This was a lot that we covered, and I appreciate if you hung out with me and finished to the end. And I am looking forward to our next webinar, and I hope to see you there. Thanks.